It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
Welcome back to the European Market Open. A minute to go until the start of cash equities trading for this Monday. Here are your headlines. G7 leaders hash out a compromise on China. President Biden's week in Europe moves on to NATO and an encounter with Russia's President Putin. Boris Johnson looks set to delay the UK's reopening amid a surge in cases of the Delta variant. And Netanyahu's record run as prime minister has ended. Israel's opposition leaders agree a power-sharing pact after 2 years of political turmoil. Let's have a look at the markets then, the futures picture as we get ready to start the first trading day of the week. This is the picture for European equity markets, and just in the last half hour or so, they seem to have made some significant moves to the upside. US equity market futures also a little bit stronger, but not by a great deal. So it does seem as if our expectations resetting just slightly, and we do expect to see a little bit of movement at the start of trade. We went through some of the stocks we were watching with Danny Berger just a moment ago. We will see whether we get any movement in those. Also in focus, we have Serco in the UK, a business that has provided an update today. That could be on the move, and Traton also could be on the move in terms of the truck making space. So this is what we have on European equity markets right now. The FTSE 100 up by 0.2%. The IBEX over in Spain up by 0.4%. So we do see some decent moves to the upside, and coming through on the Xetra DAX, where we're up by 0.3%, and the CAC 40 up by 0.4. So some fairly sizable, fairly strong moves coming through. I also see Philips is one of the early fallers, down by around 4%. Philips came through with an update overnight in terms of the increase in costs. So that is an interesting story that we will watch. The market seems very reactive on that particular news line. Let's get then from these European equity markets and the opening to a broader conversation about what to expect this week. Treasury yields have edged higher as investors prepare for a key Fed meeting later this week. The central bank is expected to reaffirm that its ultra-loose policy is appropriate and it's too soon to even think about tapering. But officials could project interest rate liftoff in 2023 amid faster economic growth and inflation. That is according to a Bloomberg survey of economists conducted last week. Joining us now is Esti Dweck, Head of Global Macro Strategy at Natixis Investment Managers. Esti, good morning. Very nice to speak to you this Monday. So our colleague Mark Cudmore was saying last hour that it's going to be very difficult for the Fed to surprise on the dovish side, which means that all the risk is kind of on the hawkish front. What are the sort of hawkish risks that you're looking at this week?
Well, of course, at this point, it's difficult for the Fed to be more dovish than it has been. But I would argue it's going to be very difficult for them to be particularly hawkish as well. Expectations at this point are for them to potentially mention tapering might be appropriate soon. A lot of the Fed speakers over the last few weeks have been sort of dropping breadcrumbs for the market to look at. Expectations, broadly speaking, are for the Fed to talk about tapering or announce it either at Jackson Hole in August or at the September meeting. So starting to have that conversation or telling us they're going to start to have the conversation over the coming meetings wouldn't be that much of a surprise. The other areas, of course, the dot plots. Now expectations again are that we'll probably see one hike in 2023, so a little bit higher than it's been. But 2 years from now, given expectations that the labor market is going to start to recuperate a little bit faster in the second half of the year, shouldn't surprise the market so much. We've seen, yields have moved up barely, but they're still very low. So I think that one of the factors is it would be difficult to surprise it in a very hawkish fashion.
Okay, so that sets us up for the Fed. What are you watching, SD, in terms of the key data points? Of course, inflation always in the mix, obviously, and the various measures of it. But wage data, given the Fed's focus on the labor market, is it the wages data that's going to be crucial?
Wages is going to be important. Labor market data is going to be important as well. And labor market participation is more important than the overall unemployment rate, of course. And what we're seeing is the Fed has told us about this inclusive recovery that they are looking for. So they want to look at participation rates for lower wage earning sectors, for minorities, for jobs that don't need a college degree. So they're really trying to look under the hood at the underlying trends in terms of the labor market. And so far, we haven't seen that move up, especially in terms of the participation rate. So probably a few months to go before the Fed starts to think we're getting closer to its goals.
We had plenty of news coming through from the G7 over the weekend, SD, and of course they reaffirmed the commitment that we'd already heard made by finance ministers. That was around a minimum taxation level and some of the other changes to try and catch more tax from the tech sector and others with a big global footprint. What impact is that making on your strategy, SD? Do you think that analysts are going to start reducing expectations for what, in particular, tech names can achieve, and that's going to be something that shapes the future for that sector?
At this point, probably not. The reality is this is a non-binding agreement. They're going to bring it out later in the year to the G20. We expect a number of countries there to not want to sign up, particularly China. We know countries that have lower taxation are probably going to object as well or want exceptions, such as Ireland. We've heard, the City of London talk about trying to get exemptions. So keeping in mind, this is not binding. It's something to look out for, and we'll probably get more headlines on it, but it's probably going to have a more minimal impact on technology than we would think. And given the strength and the size of the earnings that they've been producing, the scale of this earnings growth, even if that comes down a little bit with expectations that, yes, their taxes are going to go up somewhat because many jurisdictions will sign up to this deal, this is further out by the time you get ratification by individual countries and application, but their earnings growth is still going to be very strong. What I think the market might be underpricing a little bit is the potential for Biden's tax hikes.
Okay, that's interesting. So there is some interest in the U.S. tax position. Sticking with the U.S. then, how investable is the infrastructure theme in the United States, given the political difficulties with getting that through Capitol Hill, SD?
So we think Biden will get something through, most likely on partisan lines, whether they manage something bipartisan and then a separate extra Democrat bill on the side, something will come through. Now, keeping in mind, it does take time for infrastructure spending to feed through into the economy. You have to find the right areas to invest in. You have to find the right partners. So this is a 2022, possibly even more 2023 support. And when you look at the scale of what Biden may be able to achieve, and you look at that over 10 years, the boost to growth is, of course, positive, but really only minimal, given it's probably 1% of GDP or less per year over the coming years. So it's more a question of time and investment horizon. But we do think there will be some areas, and Biden will achieve some kind of infrastructure package.
SD, thanks so much for your time. Good to speak to you. Have a good week. SD Dweck, Head of Global Macro Strategy at Natixis Investment Managers. Thanks very much for spending time with us here on the European Market Open. Coming up on this program then, did the G7's communique fall short? There's a lot to digest from President Biden's first international summit. And Boris Johnson is set to announce plans for the UK's reopening. We'll discuss all of that with Voices from Business next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You're going to see just straightforward dealing with China. I'm not looking for conflict. Where we cooperate, we'll cooperate. Where we disagree, I'm going to state it frankly.
We definitely have to deal with the fact that China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
There will be a need to contest China, particularly in the matters of human rights. And that's where all of us, as a G7 and partners, are aligned in ensuring that we are consistent and united in our approach on these issues.
We must cooperate with China, but we must also be frank about what we do not agree and do not accept. The U.S. president said that silence is complicity.
The G7 is not a club which is hostile to China. It is an international competitor from whom we expect the full respect of all the rules we collectively and voluntarily submitted ourselves to.
That was the G7 leaders on the group's ongoing relationship with China, something they managed to come to a common view on, at least for the purposes of the communique. But it did seem behind the scenes there were some very varied views. That meeting is now over, the G7, of course, and the group of democracies has published a 25-page communique on the agreements made in Cornwall. They're vowing to fight the virus, climate change, and China's growing influence. With me now for a response from the business community, Karen Billamoria, Lord Billamoria, President of the Confederation of British Industry. Lord Billamoria, thanks very much for joining us. So from the CBI's perspective, you had certain expectations going into the G7, areas that you wanted leaders to focus on. Going through the 25-page then communique, were there things in there that you were pleased to see? Were there things that were missing?
Yes, I had the privilege as president of the Confederation of British Industry and the CBI to chair the B7, which is the business organizations of the G7 countries. And of course, this time we had South Korea, Australia, South Africa, and India, and of course, Business Europe at the table as well. And we made our recommendations a month ago that fed into the G7. I'm very happy to say that many of our themes were followed up on. Of course, we focused on the pandemic and the vaccines and distribution of vaccines. We focused on digitalization, on climate change, and of course on trade. And when it comes to vaccines, I think the commitment made to vaccinate the whole world was very much there at the G7. The fact that the US has said that they're going to donate 500 million doses, we're going to donate 100 million doses, but actually the world needs 11 billion doses. So I think the ambition needs to be much, much greater and the investment. If you think about it, these 7 countries alone make up almost 50% of the GDP of the world. They make up 72% of the wealth of the world. If the investment is made to ramp up the production of vaccines around the world and make that investment, it will pay off for the whole world. And I think we need to be much, much more ambitious when it comes to vaccines.
And were there other areas where you wanted to see more ambition? I know that the B7 that you say you chaired that came up with a roadmap for rolling back protectionist measures. Was there enough focus on that kind of thing? It did seem as if we're in a new era of multilateralism, but some of the sort of legacy trade tensions still remain, perhaps.
Well, of course, we had the whole Northern Ireland Protocol issue going on side by side with the conference, and on that matter, we do need to be pragmatic. We need to be practical. We need to respect the Good Friday Agreement. We need to come up with things like a veterinary agreement to enable the trade to flow. After all, Northern Ireland is part of the United Kingdom. The protocol is the least worst option, and we've got to make it work somehow. And on the broader international trade, there was a commitment, as we recommended as well. We had the Director General of the WTO, Dr. Ngozi, who took part in the B7, and the G7 has also admitted that the WTO needs huge reform, and we said it is in the last chance loon. So that commitment to international trade and rolling back protectionism is also something that we recommended, and that has been taken up. And of course, the other big area is climate change. And on climate change, again, we need to be far more ambitious. Today at the CBI, we are starting our 2-day net zero conference, our road to net zero. And business needs to take the lead there. Again, the G7 made commitments, but it's business that actually has to act, and it's action that matter now, leading up to COP26. We've got the Environment Bill in Parliament, in the House of Lords. That's got to go through, thoroughly debated before we come to COP26. We've had Partha Dasgupta, Professor Partha Dasgupta of Cambridge University, and the economics of biodiversity. It's so important. David Attenborough endorsing that as well. But when it comes to climate change, look at business. EY has committed to going carbon negative this year. Microsoft is committed to going carbon negative this year. 1/3 of the largest businesses in the UK, with a market cap of £650 billion, have committed to net zero by 2050. So business has to lead by example.
Yes. No doubt a conversation that will continue. We'll continue to track that. More immediately, I suppose, businesses are focused, certainly hospitality businesses and entertainment businesses focused, Lord Billamoria, on the planned reopening on June 21st, which now looks to be very much in doubt. If we see an extension to the lockdown measures that are still in place and certain businesses are not able to open, do we need to see a change to the furlough scheme? Because we are going to see some tapering of government support in the shape of the furlough scheme in early July. That is currently the plan. If we see a delay to the June 21st date, does the furlough plan need to change?
Again, going back to the B7, Dr. Geeta Gopinath, the chief economist of the IMF, attended our conference, said very clearly that the recovery from this pandemic around the world is going to be twin-track. Countries like ours in the United States of America that have a very good vaccination program and have been able to provide huge support to our businesses, £400 billion in our case, we will recover very quickly. We will bounce back quickly. So that support needs to continue. It is already there until September, but some of it is tapering off. So we do need the government, if they're going to extend this by a month. Hospitality businesses are suffering. People go to a restaurant or drive past a pub and say, oh, it's buzzing. But yes, it's not full. They're barely making ends meet. If they're operating at 67%, 70% capacity, they need to be able to operate without social distancing. The full restrictions need to be lifted for them to be able to survive. So it's going to be very, very tough for the hospitality industry, the tourism industry, worth over $100 billion to our economy. They need the help. The aviation industry, which has been down on its knees, it needs help. Yeah. Our airports, our airlines. So that help needs to be extended if the lockdown, if this opening up is postponed by 2 weeks.
Does the extension of is the extension of furlough and maybe stepping away from that taper, is that going to be enough for those industries that you cite, Lord Billamoria, the hospitality sector, tourism, aviation? The government has so far been reluctant to provide sector-specific support. Do you think we need sector-specific support for those specific sectors?
They have been providing sector-specific support as well. Look at the VAT, 20% down to 5%. They've said that needs to be extended. What's the point of giving a VAT reduction if your outlet is not open? They've only really been open since the 17th of May. The rates relief, that has been extended. It needs to continue. The rent, the ability to prevent you being thrown out of your premises, that needs to be extended. The furlough scheme support needs to be extended. And so far, the Chancellor has been very good at listening and being flexible to businesses' needs throughout this pandemic. We've the last mile now. We've just got to get that support continuing. And then I'm very confident that we will bounce back very, very strongly and rapidly.
Okay, Lord Billamoria, thanks very much for joining us. Lord Karen Billamoria, President of the Confederation of British Industry. Yes, and a reminder to me of the rate support and VAT support that is in place for those sectors. We'll see whether anything more sector-specific comes or whether we do get any extension of furlough measures then if the government does delay the full reopening. Let's take a look at some of the stocks that are on the move this morning. Bloomberg's Danny Berger has a rundown for us. Danny.
Anna, Phillips is the biggest mover in the Stock 600 to the downside this morning. You'd mentioned it right when the market opened, and it's continuing that negative lead. They're booking new costs about 250 million euros worth over a voluntary recall. This is some of its sleep and respiratory care devices. They're having a repair and replace program. That's where those extra costs are going to be coming from. Ferrari, the second biggest decliner in the index, a rare double downgrade from Goldman. So this means that Ferrari was a buy from them. It is now a sell. This has to do with more capital expenditures from the company. They're, of course, trying to launch their electric vehicles by 2025. And Goldman says that they just don't see positive earnings surprises from here on out. ITV, to the other side, this is from an FT report that as soon as next year, the UK government's going to put out new recommendations in terms of regulation over online platforms. So this is your Google, your Amazon, and their ability and their bargaining power over a lot of TV rights. So this is supposed to support those public service broadcasters. That includes BBC and, of course, ITV, which is why we see those gains, Anna.
Thanks very much, Danny. Danny Berger with a list of some of the stocks that are on the move this morning. Keeping our eye on the geopolitics, we're also getting lines coming through from the NATO meeting taking place in Brussels. The General Secretary of NATO, Jens Stoltenberg, commenting this morning. Let's listen in.
Planning to provide support, and also some NATO allies are now in direct dialogue, including the United States, Turkey and others, on how to make sure that we can maintain an international airport in Kabul. This is, of course, important for NATO allies, but it's also important for the whole international community, for diplomatic presence, and also for continued development aid. So, yes, we are ending our military presence. We have been there for almost 20 years. The intention was never to be there forever. We are clear-eyed about the risks that the decision to end our military presence entails, but at the same time we will continue to support the Afghans.
Jens Stoltenberg there speaking at that NATO meeting. We'll continue to bring you news lines. He says that Russia relations are at the lowest point since the Cold War. China's military buildup poses challenges. Just some of the lines coming out of NATO. And coming up, Biden is in Brussels today for that NATO summit. That's after a busy week of diplomacy at the G7 in Cornwall. We'll have the latest next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. 24 minutes into our European trading day. Markets making some decent gains, actually, this morning. One eye on the politics, though. US President Joe Biden, his Europe trip continues. He's in Brussels today for a summit at which he hopes to revamp NATO's tarnished alliance. We already heard some lines from Jens Stoltenberg of NATO this morning. Joining us now is Mark Champion, Bloomberg's senior reporter for international affairs. Really good to have you with us then, Mark, on this program. So Biden's on the second leg of this European tour. What can he hope to achieve then from the NATO summit? It's due to last only a few hours, but he's really trying to reinvigorate this alliance.
Yes, absolutely. I mean, he's got to really pack it in. I mean, the first thing he wants to do is try and expunge the memory of Donald Trump and his visit to NATO, and really get other NATO allies to believe again that the U.S. does not in any way consider NATO to be obsolete, that it's completely committed to Article 5, and so on. And then the next big one is China, which is a difficult task. He's got to persuade them that China is a threat in the European theater, and that NATO needs to address it. And China does have some allies within NATO, so that's likely to be quite a difficult conversation. And then, as you heard from Jens Stoltenberg, NATO is pulling out of Afghanistan, and that's sort of a difficult trick to pull off. At the same time, the U.S. is trying to, NATO is trying to sort of recommit to say what NATO's for again, at the same time as pulling out of Afghanistan. What's it for? It's got a new strategy. And then finally, he really wants to set up a meeting with Putin that he has afterwards, so that he can, go there with a sort of sense of allied unity behind him.
Yeah, and of course he's made comments about democracies and autocracies going into this, and the presence of the Turkish president there. You wonder how that particular meeting will go. Mark, thank you very much for your time. Thanks for the heads up on the things we should be watching out for. Mark Champion joining us there with the latest on the NATO summit, a Bloomberg senior reporter for international affairs. And we have heard from Jens Stoltenberg this morning. He says they'll continue to strive for a dialogue with Russia, but to Mark's point there about China and the threat that the US sees there, NATO's Stoltenberg saying China's military build-up poses challenges. Coming up, we'll turn our attention to the UK once again. Boris Johnson looks set to delay easing of England's restrictions. The rethink is linked to the spread of the Delta variant. We will get further details next. This is Bloomberg.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open, half an hour into our European trading day for this Monday morning, and European equity markets look to be in fairly fine form actually this morning. The Stoxx 600 here in Europe up by 0.5%, the FTSE up by a similar margin, as is the DAX, and as is the CAC 40. The CAC 40 outperforms perhaps just a touch there. Let's have a look at the sector breakdown then. Only one sector looks to me, as I glance to the side, just looks to be in negative territory. There we go. Yeah, basic resources down just a fraction, and that may be weighing a little on London. Not that you'd notice, though, from the overall moves in markets. Technology moves to the upside quite strongly, up by just over 1%, and some heavyweight names in terms of adding points to the index this morning. ASML, SAP, and Infineon, they all lead the points charts, if you like, when it comes to the technology sector, all making decent gains. Let's get a Bloomberg First Wave News update. For that, here's Juliette Sali.
And Benjamin Netanyahu's record run as Israeli Prime Minister has ended. Opposition parties united in a bid to end more than 2 years of political turmoil. The country's parliament has cleared Jewish nationalist Naftali Bennett and centrist Yair Lapid to take over in a power-sharing arrangement, while Netanyahu is now vulnerable to pending graft charges. Passing a budget will top the new coalition's agenda. G7 leaders have taken a strong stand against China's economic aspirations and human rights practices at their 3-day meeting in England. President Biden declared there'd be plenty of action on Beijing, including offering an alternative to the sweeping Belt and Road Initiative. The group fell short of its own vaccine goal, 613 million new doses pledged instead of 1 billion, and strategies to tackle climate change were another focus. Apple will stop requiring customers to wear masks at some US stores due to what it says is progress on the pandemic in America. Staff will keep wearing them. Apple was one of the first companies to close its stores as the outbreak spread across the globe. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Juliette, thanks very much. Juliette Sali in Singapore. Now, the Nord Stream 2 pipeline has been a divisive issue between the US and some European powers for a long time. Now, as President Joe Biden meets with European leaders, the long-standing question over the pipeline's role in the continent's energy market is finally coming to a head.
President Biden is meeting with dozens of heads of state during a tour of Europe, culminating in a sit-down with President Vladimir Putin. While there are plenty of issues to discuss, there's one that particularly interests many in Europe.
Nord Stream 2.
Nord Stream 2.
Nord Stream 2. Nord Stream. Nord Stream. Nord Stream 2. Nord Stream 2.
Nord Stream 2.
As Germany moves away from coal and nuclear, gas demand will surge, pumping 55 billion cubic meters of Russian gas every year. Nord Stream 2 was supposed to be part of the solution. But geopolitical concerns and questions around the climate impact of LNG have worried observers.
I've been opposed to Nord Stream 2 for a long time.
Ultimately, it's in contradiction to the EU's own energy security goals.
There's no united position in NATO on the pipeline.
Germany is making a tremendous mistake by relying so heavily on the pipeline.
It's not only a political threat, it's also a geopolitical threat.
The project is owned by Russian gas giant Gazprom, with 5 European energy companies as investors. Originally to come online in 2019, sanctions have delayed the €9.5 billion project and caused insurers like Zurich and Munich Re to pull out. In May, the Biden administration waived some congressionally mandated sanctions on Nord Stream 2.
We've completed laying the pipes for the first string of Nord Stream 2, and works are advancing on the second string.
With the first line completed and pre-launch tests underway, the US sees any prospects of stopping Nord Stream 2 increasingly remote, and Merkel is due to go to the White House in July to discuss the division between DC and Berlin over the project. While these tests will be run on Nord Stream 2 over the next several months, the prominence of the German Green Party ahead of September's national election could also erode domestic support for the project. And as the EU aims to be carbon neutral by 2050, even if Nord Stream 2 comes online, it may be the last pipeline of its kind in Europe.
A look there at geopolitical and climate concerns around the Nord Stream 2 pipeline, and that is something that, of course, under the Trump administration was very much talked about at NATO meetings. We have the NATO meeting taking place today. We previewed it earlier, and we have had continuing lines coming through from the NATO organizations, Jens Stoltenberg, and one of those more recent ones, we're not entering a new Cold War with China. That's a really interesting take, given the G7 stance and the difficulty it seemed that there was in coming to a common view amongst the G7 around China. Now, sticking with politics, but moving to Israel, it is the end of an era in Israel. Nationalist politician Naftali Bennett has been sworn in as Prime Minister overnight in Jerusalem.
I, Naftali
Bennett, son of the late Jim Yaakov and Myrna Leah, accept the obligations of Prime Minister to uphold the values of the State of Israel and its laws, to fulfill my duties and enact the decisions of the Knesset.
Naftali Bennett there, that's after the Israeli parliament approved a new government, effectively ousting Benjamin Netanyahu as leader after a record 12 consecutive years. For more, joining us now is Bloomberg's Bobby Ghosh. Bobby, very good morning to you. So is this really the end, then, of the Netanyahu era?
Well, I hesitate to go that far. It is certainly the end of this phase of his career, but Benjamin Netanyahu has shown that, if nothing else, he has a talent for getting out of tight political spots. He seems absolutely determined to bring the government down. He will remain in parliament as a member of the single largest party, and I think he will dedicate himself to trying to peel away members from the current coalition. All he has to do is convince one member of parliament, one member of the Knesset, to abandon the coalition, and the whole house of cards collapses, and he gets another shot. So he's gone for now, but I suspect not for very long.
Gone for now, but maybe not forgotten. So we have this coalition put together, as you say, pretty fragile, crafted with a nationalist leader. We saw him being sworn in as the first prime minister, and then after that, Yair Lapid is supposed to get his turn as the second prime minister in this coalition. But given all of the different views that are represented on this very broad coalition, how likely is it then, in your view, Bobby, to last?
Well, the only thing the entire coalition agrees on is the exit of Benjamin Netanyahu. Beside that, they don't seem to have a common agenda at all. You have people from the left, people from the extreme right, you have religious parties, secular parties, you have Jewish parties, you even have, for the first time in an Israeli governing coalition, an Arab Islamist party. The leaders of the different parties have notionally at least agreed that they will set aside all their differences and focus only on issues that they can all agree on. So that probably means that they will focus on managing the economy. That will certainly be the effort. But there's a tendency in Israel for politics to assert itself no matter what the best intentions of the politicians. So the issues about the treatment of the Palestinians, issues about dealing with Hamas, as much as they want to push those to the back burner, they will assert themselves, and I suspect that pretty quickly the coalition will find itself in disagreement over something quite significant. I would, if I were a betting man, I would not put money on this government lasting long enough for that handover from one prime minister to the other. So that would be, I think, at the outside 2 years, but probably much less than that.
And so, Bobby, this could be a coalition that, as you say, focuses maybe on the economy, but steers away from any of the very tough decisions. How is it possible for them to really not form views on Hamas, on Palestinians, on all of the issues that have been so difficult for Israel over recent years?
That's exactly the problem. The short answer is that it is not possible. They would like to avoid confronting those issues in the interest of keeping the coalition alive, in the interest of moving forward and pushing Netanyahu farther and farther into the rearview mirror. But I think these are issues that crop up constantly in Israel. Only last month there was a war essentially with Hamas, in which there were casualties on both sides. And currently there's a divide within Israel amongst the Jewish population and the Israeli Arab population. These are big issues. These are big issues, and they will pop up onto the agenda, whether or not the government wants it to.
Okay, Bobby, thanks very much for your perspective. Bloomberg's Bobby Ghosh joining us there with the latest on Israel politics. So coming up on this programme then, Boris Johnson looks set to delay easing of England's restrictions. The rethink is linked to the spread of the Delta variant. We'll get the very latest next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the European Market Open. 43 minutes into our European trading session for this Monday morning. European equity markets moving to the upside. Some gains in particular over on the French market, up by 0.6% on the CAC 40 right now. Let's get a Bloomberg business flash. Here's Juliette Sali.
Anna, Bitcoin has jumped after Elon Musk said Tesla would resume transactions with the cryptocurrency when mining is done with cleaner energy. Musk has whipsawed the price of Bitcoin and other digital tokens in the past few months, ever since announcing Tesla had bought $1.5 billion of Bitcoin back in February. Apple will stop requiring customers to wear masks at some US stores due to what it says is progress on the pandemic in America. Staff will keep wearing them. Apple was one of the first companies to close its stores as the outbreak spread across the globe. Blue Origin has raised $28 million by auctioning a seat to a company founder Jeff Bezos on his ride into space next month. The company says the identity of the winner won't be revealed for a few weeks. Saturday's live auction followed weeks of online bidding with more than 7,000 submissions from 159 countries. And that is your Bloomberg Business Flash. Anna.
Juliette, thank you very much. Juliette Sali joining us there from Singapore. Now, Boris Johnson is set to delay plans to lift England's remaining COVID restrictions. The UK Prime Minister is expected to extend limits for up to 4 weeks. The decision comes amid a surge in infections linked to the Delta variant. UK cases of the strain, first identified in India, more than tripled in a week. Bloomberg's senior pharmaceutical analyst Sam Fazeli joins us now on set here in London. Sam, very good morning. I was looking at some comments from the Health Minister Edward Arger this morning, speaking to other media here in the UK, suggesting that the first dose of the vaccine gives, a 30% or so immunity, which is something we talked about last week. He suggests the second dose gives 81% immunity, which is maybe a little bit more than the numbers we've been dealing with. But either way, there's a big jump between first and second dose, and that's the point.
Absolutely. I mean, the second dose has always been the one that gives you that final big boost in antibodies and everything that protects you from that initial infection. So that's exactly right. The 81% is an interesting number. I think it's the 80.8% I've been seeing in the Public Health England updates. So unfortunately, we don't know which vaccine, because that's a mix of the two vaccines together.
Right. Right, indeed, and we've had a mix of the two vaccines together. Older people, perhaps Pfizer to start with, and the very eldest. Then a large group of the population having the Astra vaccine, and then the younger groups more Pfizer and Moderna. So what more do we know about the Delta variant then, Sam, and what is justifying this much talked about need to delay reopening? That seems to be everyone's expectation now.
Sure. So we know that it's 40 to 60% more transmissible, depending on the setting. I mean, that's very difficult to calculate, right?
Yeah.
We know that it can be, on that same report that talked about 80.8% second dose effectiveness, the PHE, Public Health England, has also said that about over 100%, a doubling of risk of hospitalization. And if you think about the fact that that's probably in the slightly younger age group, that's where the real worry comes from. That pressure on the NHS coming back again when they're trying to deal with a 4 or 5 million backlog.
Right, and that doubling of hospitalisation, is that a rate? Is that a percentage? How is that being measured? It's not just because we opened up large swathes of the economy and therefore more people were getting the virus, so more people ended up in hospital, and younger ones.
Yeah, no. So it's all of the above. Right. So more people are interacting, the virus more transmissible, and it seems to be a bit more, the disease that it causes appears to be more severe when it gets you to that point.
So when it gets you to hospital. But in terms of identifying this variant of the disease, it doesn't necessarily seem more severe, it just seems very different, doesn't it? So tell us something about what are the symptoms that this variant is presenting with.
Sure. So Professor Tim Spector, who is in charge of the Zoe project, I don't know if anybody outside the UK knows that. It's an amazing project. 4 or 5 million people fill in their symptoms on a daily basis. He says that what they're seeing is a trend to milder symptoms in some people, meaning that they think they've got the common cold. So they don't lose the sense of smell or taste, they don't really have a cough, they just have a runny nose, headache, maybe a fever.
But it should still show up with the same tests, the same
Oh, yeah,
PCRs and
absolutely.
lateral flows
Absolutely.
should be
Right.
just as effective or not as they are with the other variants.
Right, but you and I, perhaps more cautious, would go and do ourselves a lateral flow test. But if you're a young person who feels that they've got a cold and they're not actually that bad, maybe they won't think about getting tested.
Or maybe a bit of hay fever this time of year.
Exactly.
Also very much complicating things in certain households, I'm sure. Sam, thanks very much for joining us. Sam Fazeli, Bloomberg Senior Pharmaceutical Analyst, and we'll look for any updates from the UK government as they come in, no doubt, later on today. Coming up on this programme, lots of comments from ECB officials this morning. Christine Lagarde says the central bank needs to really anchor the bloc's economic recovery. As we spoke to Robert Holtzman, who tells us exclusively his bond buying programme at the ECB will come to an end if there's no new wave. We discuss all of that with Market Live team's Ven Ram next. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You're going to see just straightforward dealing with China. I'm not looking for conflict. Where we cooperate, we'll cooperate. Where we disagree, I'm going to state it frankly.
We definitely have to deal with the fact that China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
There will be a need to contest China, particularly in the matters of human rights. And that's where all of us, as a G7 and partners, are aligned in ensuring that we are consistent and united in our approach on these issues.
Essere franchi. We must cooperate with China, but we must also be frank about what we do not agree and do not accept. The U.S. president said that silence is complicity.
The G7 is not a club which is hostile to China. It is an international competitor from whom we expect the full respect of all the rules we collectively and voluntarily submitted ourselves to.
host of G7 Voices there, G7 leaders on the group's ongoing relationship with China. Let's think about where the geopolitics conversation goes next, because there are plenty of things to be watching for this week. Later today, the NATO summit begins in Brussels. Then on Tuesday, the action moves on to the EU-US summit. That also takes place in Brussels. And of course, President Joe Biden will also be attending. Then Biden heads to Geneva, where on Wednesday he will meet with the Russian President Vladimir Putin. Also on Wednesday, we'll have the FOMC's rate decision, followed by a news conference by the Fed chair, Jay Powell. Plus, China releases May industrial production and retail sales data. So we're back to the real economy stuff. And on Friday, Iran holds its presidential election. Many moderate and reformist contenders were disqualified, leaving the field dominated by arch conservatives. Of course, we continue to watch the conversations from a nuclear perspective involving Iran. Let's get back to the markets then, and how is all of this going to weigh on the markets and influence our course? Ven Ram from our Markets Live team joins us now. Ven, very nice to speak to you. So let's think about the Fed. And I guess many people are looking at how low interest rates are, looking at how low the US 10-year yield is, and wondering what the Fed will do, how the Fed will surprise the markets, if it's possible for the Fed to surprise the markets this week.
Morning, Anna. And I don't think that the Fed is very eager to surprise the markets just yet. I think like the ECB did last week, they are unlikely to rock the boat just yet, and they're bound to reiterate that while the economy is improving, they need to see substantial further progress, lines we have heard before. A formal taper discussion, I think, is unlikely before September, and the first rate increase is unlikely before 2023. If the meeting evolves along these lines, it may still not be enough to send Treasury rates higher. I've been saying from the end of April that we are going to see a tactically bullish market in Treasuries amid a secular bear market. And that's exactly how it's playing out now. Anna?
Okay, so we'll look for that. 146, the yield on the US 10-year right now. I'm just thinking about UK assets as well, Ven, because, of course, we've got this ongoing conversation about it looks increasingly less likely that we will reopen the economy fully. We've already seen quite a lot of reopening, but we won't do it fully on 21st of June, as previously anticipated. I'm drawn to some comments by John Rowe, which I think are great, from Legal & General. He says the lockdown headlines are like key moments in horror movies. Each new one shocks the audience less, and I wonder if we've become a bit desensitized to this bad news flow when it comes to UK assets.
That's definitely true, and we've become a lot more immune to those headlines, and you can definitely see it on the pound. And the pound has taken all this on the chin and is sitting there pretty well at 141 plus, and I expect it to kind of continue to advance, albeit in fits and starts. But where you can see more of an effect of all these the government measures is in the gilt curve. And I think that if you see the front-end yields, the 2-year specifically, it hasn't gone anywhere at all in relation to where it needs to be, given the economic growth that we are expecting this year. So I would say that the gilts are a bit more sensitive than, say, the pound.
And then, just very briefly, another week, another ECB narrative. What's new?
Well, they're going to keep PEP alive until at least March 2022. And if the economy evolves as it is evolving at the current pace, I think that they will be willing to let go of PEP at the end of March. But then they will roll it over into PEP, into asset purchase program, APP, the longer-running APP.
Okay, we'll watch for that then, Ven. Thanks so much. Thanks for joining us. Ven Ram from our Markets Live team. That is it for the European market open for this Monday morning. Surveillance Early Edition is up next. The sun's shining outside here in London. The sun's shining on markets, if you're long at least. European equity markets making decent moves to the upside. European equity markets led higher, it seems, by the CAC 40 in Paris, up 0.6%. Have a good day, everybody. This is Bloomberg.
Bloomberg Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Leaders have pledged over 1 billion doses, either directly or through funding to COVAX.
China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
You're going to see just straightforward dealing with China.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance, everyone. Early edition on Monday, the 14th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. G7 reset. President Biden lays the groundwork for his global agenda as a weekend summit. Well, this week he meets with NATO, the EU, and the President Putin. The UK's reopening is set for a delay. Prime Minister Johnson is extending the lockdown by an additional 4 weeks amid a surge in the highly transmissible Delta variant. And Elon Musk boosts Bitcoin with a tweet yet again. The Tesla chief executive says the company will accept the digital currency as payment again if miners clean up their act. So there's quite a lot going on this week, and it's only Monday. Remember that when you go for your first cup of coffee on this Monday morning. But let's get straight to our top market story with our Danny Berger. Hi, Danny. Great to have you back. So the Fed looming later this week. What does trading look like ahead of it?
Well, Francine, look, if you're a trader and you're waiting for that Wednesday meeting, we're in the middle of the summer. You have much of Asia off on holiday today. Volumes are just so light. It really feels like those summer doldrums have hit market participants really hard. Now, overall markets, we are seeing equities float higher this morning. We are seeing higher yields. But really the trend for treasuries over the past week has been one of a short squeeze, of a treasury rally. The Fed does seem like it's done a pretty good job of convincing bond markets that they're going to be able to contain inflation expectations. So we're getting a little bit of a steeper curve as well this morning. And really, I think just on that lookout for Wednesday, the expectation is that we'll get that median dot plot increase for 2023. So, inflation continues to be the story, despite the fact that people don't want to make a lot of moves today, and volumes will likely continue to be pretty late.
Bitcoin, Danny, is definitely seeing some action over the weekend, and this is another Elon Musk tweet.
Yeah, definitely one asset that doesn't have the summer doldrums. And of course, if there are big moves in Bitcoin, there's going to be a corresponding tweet from Elon Musk, as we know too well, and probably much to the chagrin of Bitcoin fans. So this time he talks about the fact that Tesla might accept Bitcoin transactions yet again if they're able to get about 50% of Bitcoin mining done in a cleaner fashion. We're not too far off from that right now, actually. Estimates are anywhere from 30 to 45% of mining is done in a clean way. But at the end of the day, we are still very far here from the highs that Bitcoin set in April, about 40%. And this in itself might not be that significant, but really it's that sentiment change that Elon Musk dominates that we're looking for, Francine.
Our Danny Berger, thank you so much, Danny Berger. They're looking at all of the market moves. Now, G7 leaders take a strong stance against China's economic aspirations and human rights practices, but they stopped short of an outright condemnation of Beijing as President Biden seeks to build momentum for an international coalition to counter Chinese influence in the world.
You're going to see just straightforward dealing with China. I'm not looking for conflict. Where we cooperate, we'll cooperate. Where we disagree, I'm going to state it frankly.
We definitely have to deal with the fact that China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
There will be a need to contest China, particularly in the matters of human rights. And that's where all of us as a G7 and partners are aligned in ensuring that we are consistent and united in our approach on these issues.
We must cooperate with China, but we must also be frank about what we do not agree and do not accept. The U.S. president said that silence is complicity.
The G7 is not a club which is hostile to China. It is an international competitor from whom we expect the full respect of all the rules we collectively and voluntarily submitted ourselves to.
Well, joining us now is Bloomberg's executive editor for international government, who's been working over the weekend, Ros Matheson. Ros, thanks so much for joining us. So how united is this front against China?
Well, there's certainly a level of high concern amongst many countries about China's growing assertiveness, both economically and strategically, and a sort of a view that there needs to be a concerted approach to managing that. Where the differences come in is how to manage that and how strongly to do so. Certainly a level of caution about pushing too strongly, because many countries have a very strong economic imperative to deal with China, and equally awareness about being seen as being part of an anti-China cabal that's led by the US. Of course, even with Donald Trump out of the picture, there is that level of hesitancy about automatically following the US leadership on certain issues around the world. And so we saw quite a robust debate behind the scenes here at Cornwall at the G7 about how to calibrate that response, and some pushback certainly from the US angle. We saw that particularly from Germany and Italy.
So, Ros, what else did they agree on? And actually, how much, did Brexit overshadow all of the proceedings?
Well, Brexit did creep in probably a bit more than the host Boris Johnson would have liked. There was a lot of to and fro between him and the European leaders here about that. Certainly an odd dispute with the French leader about sausages in France versus meat from Northern Ireland and what actually constitutes a part of the UK. And it sort of descended a bit into that, and that sort of overshadowed some of Boris Johnson's efforts to host the summit. But equally, given it was the first time they'd all met in person, many of them for a year or two, and the first fully fledged G7 for a while, there was an overarching desire to sort of present it as a reset, a restart, leaders able to talk again and unite on certain issues beyond Brexit, particularly again on those geopolitical issues and on things like climate change.
Ros, thanks so much. Bloomberg's executive editor for international government there, Ros Matheson. Now, NATO leaders will also meet today in Brussels. This will be Joe Biden's first trip to Brussels as U.S. president. His presence comes as a relief to many, not least NATO Secretary General Stoltenberg, who said this morning that relations with Russia are at a particularly low point.
Our relationship with Russia is at its lowest point since the end of the Cold War. This is due to Russia's aggressive actions. I am confident that the NATO leaders will confirm our dual-track approach to Russia, strong defense combined with dialogue.
Well, joining us with more is our Brussels reporter, Maria Tadeo. So, Maria, exactly what will be on the agenda, and are they talking about the new NATO? We were having a debate in the newsroom about what actually NATO has accomplished thus far.
Well, yeah, Francine, and at the G7, as you just mentioned, it was all about China. The NATO summit, it will be all about Russia. And, in terms of what's top of the agenda, that there's a real transition happening in the themes. When President Trump used to come to a NATO summit, all he cared about, and this was a real fixation from Donald Trump, was that 2% defense spending. This was the one thing that he kept repeating time and time and again. Interestingly, this time, we haven't really heard anything around it. This is not the line that the United States is pursuing. Nonetheless, there is a lot going on with Russia. The southern European countries, the eastern European countries uniting on that. A lot of nervousness when you speak to the Polish, the Lithuanians, also the Ukrainians, and President Biden making it clear that there is, quote, a sacred duty that the United States has when it comes to defending NATO and Article 5. Now, all of this is happening, Francine, and you can see the sequence of this before that meeting on Wednesday between President Biden and Vladimir Putin. What the U.S. is aiming to get out of this meeting today is a united front from all of the NATO countries, the Western liberal democracies, against Russia's aggression, so he can come into that meeting with leverage and be tough, quote unquote, on Vladimir Putin.
Maria, thanks so much. I'm Maria today there in Brussels for the NATO summit. Now, coming up on the program, cryptocurrencies get a boost from Elon Musk's latest tweet about Bitcoin. We'll discuss that with HSBC FX strategist Dominic Bunning. Then, after 12 years in power, Benjamin Netanyahu is unseated as Israel's prime minister. What next for the fragile coalition succeeding him? This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, the group of 7 blockbuster pledges of a billion vaccine doses fell short of expectations this weekend, as leaders included previously announced vaccine donations in their total. Now, with only 613 million new doses were promised by the G7, the summit risk being defined by falling short. Well, Europe's leadership were content that the summit itself did not dissolve into hostilities. France's Emmanuel Macron welcomed having the U.S. president part of the club and very willing to cooperate. Well, joining us now is Dominic Bunning. He is HSBC Senior FX Strategist. Dominic, thanks so much for joining us. I think a lot of the focus was definitely on China and the fact that there seemed to be a united front in how to deal with China in terms of economic policies, but also human rights abuses. What does that mean for euro, dollar, and yuan?
Yeah, no, I don't think, to be honest, the geopolitics is going to have a massively strong impact on the currencies. I think deep down we still see the economics as being what's important. And I think, you know, to some degree you're seeing in China a little bit of a slowing and a little bit of an operation in terms of trying to engineer a little bit of currency weakness. So we still see over the course of the rest of the year dollar renminbi pushing slightly higher. And I think the same's true in terms of where the euro goes. A lot of it does come down to that economic backdrop. Is it possible that the ECB can be much more hawkish or turn even at all hawkish? Well, it's pretty tricky. So it's hard to see the euro going much higher as well. So, you know, all of that's obviously going on. But to be honest, I think the big event this week is the Fed. I don't think many currency traders are looking at G7 and going, wow, that was the big event. I think we're all looking at the Fed tapering, et cetera, et cetera.
Yeah, I mean, the Fed is obviously the big one. I just wonder how much of the tapering is already priced in a lot of the currencies.
Yeah, I do think there's an element of that being the case. It's been discussed in some respects, certainly in markets for some time. You've seen a bit of a shift from some of the members of the FOMC. And I think there's an element of that. But in the currency world, what's been interesting is that the dollar has generally remained pretty soft over the last few months. Obviously, Q1 was quite a good quarter for the dollar, but Q2 we've seen a lot of those gains reverse, and I think the market from an FX perspective is pretty sanguine about those risks, and actually that's often when these kind of announcements can have an impact. So I would think that actually with positioning where it is, the actual chance that tapering discussion, even if it starts to be brought up in very loose terms, possibly the shifting forward of the rate hike dots, for example, those sorts of things, they may bring a bit of short-term positivity to the dollar if we get that coming out on this week.
So, I mean, I guess what market players really want to know is whether, the Fed or when the Fed starts discussions about winding down purchases. When do you think that will be, Dominic?
No, I mean, I think they're already having some discussions about it, and they'll probably let that on this meeting. But in terms of the very specifics of that discussion, that's going to be waiting, I think, until really Q3, probably the September meeting. So if you were sort of asked for the timeline, I'd sort of say, look, they're discussing it in some respects now. They're only going to give us any detail of how that process will play out in September. And then in December, we should have that tapering announcement. So that's really how I see the timeline. It's still pretty drawn out. And that's why in our base case, we do still see a little bit of dollar weakness against most currencies. But I don't think there's room for a massive dollar weakening. I think it's pretty marginal. And then come the end of the year, when that tapering starts, when all that discussion becomes a lot more pertinent, then I think the dollar will start to gain again.
So, Dominic, is today the right time, for example, to take advantage maybe of some havens like yen?
Yeah, look, we still like the yen. And I do think there's an element of potential risk aversion coming through. I mean, I think the currency where I still think there's more downside, and it's been moving the other way. But I think in sterling, what you've got is a currency story which is incredibly optimistic, very positive from most market players. But I think all the good news is priced in. So if you were to ask me where potentially you get a bit more bang for your buck in terms of dollar doing quite well, it might be against sterling. I think dollar yen is kind of a bit of a range at the moment because it sort of benefits from the risk off element, but it potentially gets hurt if you do have a bit of a push higher in US yields. So it's a bit of a balance there. I would say, if you wanted to buy the dollar, I'd favor buying it against sterling. I think that's probably the better risk reward at this point.
Dominic, thanks so much. Dominic Bunning there of HSBC stays with us. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Benjamin Netanyahu's record run as Israeli Prime Minister has ended. Opposition parties united in a bid to end more than 2 years of political turmoil. The country's parliament has cleared Jewish nationalist Naftali Bennett and centrist Yair Lapid to take over in a power-sharing arrangement, while Netanyahu is now vulnerable to pending graft charges. Passing a budget will be top of the new coalition's agenda. Here in the UK today, Prime Minister Boris Johnson looks set to announce that he will not lift England's pandemic curbs on June the 21st. Johnson and senior ministers have signed off on a 4-week delay, according to reports in the press. This comes as the UK reported more than 7,000 new cases yesterday. Now, that was for a 5th straight day amid a surge in infections linked to the Delta variant. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, cryptocurrencies get a boost from Elon Musk's latest tweet about Bitcoin. We'll discuss the intersection between digital and fiat currencies with Dominic Bunning. This is Bloomberg.
U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bitcoin jumped 8%, taking the digital currency above $39,000 following the latest commentary from Elon Musk. In a tweet, the Tesla chief executive said that his company would resume transactions with Bitcoin when mining is done with more clean energy. Now, he also revealed that Tesla sold just 10% of its Bitcoin holdings in the last quarter to prove that the tokens could be liquidated easily without moving the market. Well, we're back with Dominic Bunning of HSBC. Dominic, I know it's extremely difficult to predict prices for Bitcoin or any cryptocurrency, so I won't ask you that. But at the crossroads between crypto and fiat currencies, like, does this blend? What does this become?
Yeah, I think it's such early days at the moment. You know, there have been times when it looks like crypto has been driving the rest of the FX market, but the work we've done and when we looked at it in more detail, really it shows very, very little relationship. And I think today's a really good example of that. You know, when you get a currency, or if you want to call it a currency, an asset being moved 8% on a tweet, look what's happened in the rest of FX. You know, nothing's really moved. So I don't think we're really at that intersection yet. I think that, you know, currencies as we know them, traditional currencies, remain dominated by those fundamental drivers, and they're not going to be impacted really by what a single person tweets. But I do think potentially it's something we need to consider as we go forward. And obviously central banks are interested in what's happening in the crypto and digital currency space. So it's something that's going to become more important. But right here, right now, it's probably not going to drive fiat currencies all that much, unfortunately.
So, Dominic, what does the crypto world evolve into, and what kind of timeline are you looking at?
Well, look, I think it's so open. You know, this is the interesting thing, and I you know, without getting into the debate about it, there are clearly pros and cons of many different cryptocurrencies for various reasons, whether it's Bitcoin or Ethereum or Ripple or Dogecoin, for example. There's so many out there that actually seeing how that evolves and whether you get one dominant currency or whether one dominant ecosystem develops, that's still such early days. What I really think is going to be crucial from a broader perspective is how central banks manage this digitization process and how they design their digital currencies, because we are going to get central bank digital only currencies, and whether they manage those in a way that means that, you know, individuals like you and I can get a central bank deposit or not, for example, or how that's managed, that could have ripples across the whole of the banking system, across the whole of the financial system. So that's going to be a process that has to be very carefully managed, and we'll start to see that take place over the next few years. But that, I think, is really where the interest will lie for broader markets.
Dominic, I also wanted to ask you about, you know, I know you mentioned actually sterling, but how do you look at, I don't know whether it's Brexit or just, you know, something else that moves sterling at the moment, but is it range bound, or could it actually move quite significantly from here until end of the year?
Well, look, I mean, it has been very, very range bound for a few weeks now, clearly. But I think what that really shows you is almost this trend exhaustion. Everyone's loved the pound for a good few months, bar us. And, you know, we've been wrong, so we'll hold our hands up to that. But I do think at this point that sterling downside looks a lot more likely and could be a lot more aggressive than the moves to the upside. And the reason I say that is that a lot of the good news is priced in. I mean, when you look at how UK rates have moved relative to the currency moves a lot further, a lot faster. That's also true from an equity flow perspective. The currency's moved ahead of any potential flows. So all of that good news about the UK reopening and the macro story is priced into the currency. And I think, therefore, the room for disappointment is much greater than the room for overachievement, much like England's football team potentially at this year's Euros. As is always the case, there'll be a lot of optimism going in, but I think actually the risk is to the downside if we don't get that full expectation of good economic news coming through. The pound does look vulnerable because everyone's long and not many people see it going down.
Yeah, Dominic, I love the football analogy. I'm quite long on, England this year, more than Italy. Dominic Bumming there of HSBC. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
G7 reset. President Biden lays the groundwork for his global agenda as at the weekend's summit. Now, this week, he meets with NATO, the EU, and President Putin. The UK's reopening is set for a delay. Prime Minister Johnson is set to extend the lockdown by an additional 4 weeks amid a surge in the highly transmissible Delta variant. And after 12 years in power, Benjamin Netanyahu is unseated as Prime Minister of Israel, but the fragile coalition succeeding him will be able to maintain their alliance. Well, good morning, everyone. I'm Francine Lackman, London. Welcome to Bloomberg Surveillance Early Edition on Monday, the 14th of June. So G7 leaders take a strong stance against China's economic aspirations and human rights practices, but they stopped short of an outright condemnation of Beijing as President Biden seeks to build momentum for an international coalition to counter Chinese influence in the world.
You're going to see just straightforward dealing with China. I'm not looking for conflict. Where we cooperate, we'll cooperate. Where we disagree, I'm going to state it frankly.
We
definitely have to deal with the fact that China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
There will be a need to contest China, particularly in the matters of human rights. And that's where all of us, as a G7 and partners, are aligned in ensuring that we are consistent and united in our approach on these issues.
Essere franchi.
We must cooperate with China, but we must also be frank about what we do not agree and do not accept. The U.S. president said that silence is complicity.
The G7 is not a club which is hostile to China. It is an international competitor from whom we expect the full respect of all the rules we collectively and voluntarily submitted ourselves to.
And you're looking at live pictures from Brussels, where NATO leaders are meeting. This will be the first summit with Joe Biden as president. Well, Russia is likely to be top of the agenda, with Secretary General Stoltenberg saying this morning that relations with Moscow are at their lowest point since the Cold War. Now, in the past few minutes, we've also learned that leaders will declare China's ambitions a systemic challenge. Well, joining us now is David O'Sullivan. He's a former EU ambassador to the U.S. Ambassador O'Sullivan, thank you so much for joining us on Bloomberg. Ambassador, when you look at the G7 and actually what this means as a premise for NATO, it does mean, I mean, it felt like America was back to what we were used to pre-President Trump, but actually tensions still remain.
Well, I think that the G7 showed was the first step of President Biden demonstrating very visibly his recommitment to the multilateral institutions, such as the G7, such as NATO, such as the EU, who we meet with tomorrow, and his willingness and openness to work with allies to engage on the big issues of COVID, climate, and China, as people have said. And I think in that sense, the meeting was a great success. Of course, there are divergences. There are even just those clips you showed of the different leaders describing dealing with China. There are some nuances to be detected there. But I think the most important takeaway is indeed a renewed sense of commitment amongst the allies to try and address these different issues together.
Ambassador, what exactly are you expecting from NATO? So if you look at the G7, it seemed that there was a pretty united front in how to deal with China. Will they be even tougher on Russia?
Well, I think, again, the big message is that the U.S. is back, fully committed to NATO. Let's be very honest. President Trump's mandate left people wondering whether you could count on the U.S. in NATO. President Biden is here to emphasize that we can, and that this is going to be a huge boost for the alliance. And yes, I think they will address the issue of Russia, especially in view of President Putin's meeting with Biden's meeting with President Putin on Wednesday, and they will also address, I think, China, and they will address the future development of NATO strategy towards the 2030 objective. And I'm sure they will also talk about the issue of spending and defense spending and whether Europeans do enough, which I think President Biden will still pass the same message as President Trump. We need you to do more.
But Ambassador, what comes after President Biden? So I know it's early days, given he's only become president in January. But do people back in the U.S. watch his every move with allies, watch his every move with China, to then decide whether they want Trump back or not?
Well, I think it's clear that the political situation in the U.S. is very finely balanced. Let's be honest. President Biden won, but he did not. President Trump also did very. Sorry. Yes. So the situation in the United States is very finely balanced, and we could see a change in 2022 in the midterms, or even in 2024. I think the voters of America honestly will be looking more to how the president manages domestic issues, their day-to-day bread and butter issues. But the fact that he is on the world stage, reasserting American leadership, reasserting the alliances, will, I think, add to his image and his domestic strength in the U.S. But he will have to demonstrate that all of this ends up with better outcomes for the American middle class than would be the case otherwise. And that's the key task he has going into the midterms and indeed into the presidential in 2024.
Ambassador, given what we've seen from Russia and Vladimir Putin over the last 5 to 6 years, how should President Biden deal with Russia when they meet, the two presidents meet in Geneva on Wednesday?
Well, it's going to be a difficult meeting, I imagine. President Biden says he wants a stable and predictable relationship. I'm not sure that President Putin does stability or predictability. I think he delights in throwing people off course. And there will be quite a lot of contentious issues, whether that's the human rights or allegations of Russian interference in domestic American politics. So both men are going to have to navigate the differences and try somehow to establish a relationship that will enable them to work together in the coming years. So it's a challenging meeting for President Biden. He'll have to calibrate it very carefully, but he will go to Moscow, or to Geneva, with a very strong backing from the allies in the G7, in the NATO meetings today, and in meeting with the EU tomorrow. So the choreography of this trip has been very carefully planned, and I'm sure he has a good idea of how he wants to handle the meeting. But it won't be easy, because President Putin is a formidable political operator, as we know, and he will have his own agenda.
Ambassador, thanks so much. Ambassador David O'Sullivan there, the former EU ambassador to the US. Now, the UK Prime Minister Boris Johnson is set to delay his plan to lift England's coronavirus restrictions on June the 21st. This is because of a surge in the Delta variant first identified in India. Instead, officials expect the Prime Minister to announce a delay of up to 4 weeks when he announces his decision this evening. But there may be some relaxations of restrictions on weddings and major sporting events. Now, at a press conference on Sunday, Johnson said he hadn't yet decided whether to lift social distancing rules.
We're continuing to look at the data. No final decision has been taken, and the right time to fill everybody in on what we're going to do with step 4, with June the 21st, is tomorrow, as I've said, and that's when we'll be putting out the whole package of information so that everybody can see it.
Well, joining us now is Alex Morales, our UK government reporter. Alex, always great to speak to you on this program. So what relaxations are actually planned for June 21st under the government's roadmap, and can we expect them to go ahead?
Well, Francine, as you heard the Prime Minister said, he said that's stage 4 of the UK's plan. So we've already had 3 steps of the roadmap, and they've all run on schedule. Most things are reopened, but there's a number of businesses that are still closed. Foremost amongst them, nightclubs have been closed for 15 months, and they're due to open as things stand on June the 21st. The restrictions on the number of guests at weddings is due to be dropped. So at present, you can only have 30 people at a wedding, but the plan would be for anyone to have, unlimited guests at their weddings if they wanted to. And restrictions on the audiences at theatres, concerts, and sports matches would also be dropped. Along with that, you've also got the guidance to work from home. These are all the final things that are left in place. The government had hoped to drop all social distancing whatsoever on June the 21st, and it looks like now they won't be able to do that. This 4th step will be the one that slips, even after the other 3 have gone ahead on time.
Alex, what are the implications for the Prime Minister of a delay? How much pushback is he actually getting into the House of Commons?
Well, he seems to have his ministers on board, but there is a sort of swathe of backbenchers from his own Conservative Party who have been reluctant to approve restrictions at many of the past stages, and they've dubbed June the 21st Freedom Day, and for them it's sort of become totemic. So he's got a lot of pushback from his backbenchers. Whether they have the numbers to thwart any attempt to delay, we'll have to see. It's important to note that the regulations that the government has expire on June the 30th. Even though the relaxation is planned for June the 21st, the legislation expires on June the 30th. So it looks like he'll probably have to get this through Parliament if he wants to go ahead with a longer delay than the end of the month.
Alex, do we actually understand why this is delayed? I mean, vaccinations are not doing badly at all in this country, in England. At the same time, it seems that people are respecting or could be respecting social distancing. So why can we not reopen on the 21st?
Well, I mean, you'll have seen the figures on caseloads ticking upwards. They've been moving upwards actually quite significantly in the past week or 2. And that's all down to this Delta variant, which originated in India and has taken hold and is now the dominant strain in the UK. And I think data shows that it's 40 to 60% more transmissible than the previous dominant strain, which was the one that originated in Kent. So it's taking hold faster, and I think the main concerns from government are that whilst vaccination provides a degree of resistance to the virus, if you've only had one shot, that resistance is 30%. So you've still got significant vulnerability to the virus. Whereas if you have two shots, that rises to over 80%. So I think the government wants to have a chance to double shot all the most vulnerable groups. That's everyone over 50, and then you need another couple of weeks after that for the resistance to set in. So that seems to be what the approach they're taking is an ultra cautious approach, because they really don't want to reverse any unlocking steps that they take.
Alex, thank you so much. Alex Morales there, our UK government reporter. Now, taper talk returns. Traders, get ready for this week's Fed meeting. Up next, we discuss with Ella Hochschild from Pictet Asset Management. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Wednesday, the Fed decides. Will the Fed react to accelerating inflation concerns? Are members eyeing an earlier rate increase? Coverage begins at 1:30 p.m. on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Let's get straight to Bloomberg Business Flash. Here's Leanne Gehrens. Hi, Leanne.
Hi, Francine. Bitcoin has jumped after Elon Musk said Tesla would resume transactions with the cryptocurrency when mining is done with cleaner energy. Musk has whipsawed the price of Bitcoin and other digital tokens over the past few months, ever since announcing Tesla had bought $1.5 billion of Bitcoin in February. Apple will stop requiring customers to wear masks at some U.S. stores due to what it says is progress on the pandemic in America. Staff will keep wearing them. Apple was one of the very first companies to close its stores as the outbreak spread across the globe. And Blue Origin has generated $28 million by auctioning a seat to a company founder Jeff Bezos on his ride into space next month. The company says the identity of the winner will not be revealed for a few weeks yet. Saturday's live auction followed weeks of online bidding with more than 7,000 submissions from 159 countries. All that money, Francine, for an 11-minute flight. And that's your Bloomberg Business Flash.
11 minutes, but what 11 minutes? I mean, Leanne, then this will make your dinner parties for years to come. I mean, imagine the stories, right? Probably worth it. Treasury yields have edged higher as investors prepare for a key Fed meeting later in the week. Now, the central bank is expected to reaffirm that its ultra-loose policy is appropriate and it's too soon to even think about tapering. Officials, though, could project interest rate liftoff in 2023 amid faster economic growth and inflation. That's according to a Bloomberg survey of economists conducted last week. Well, joining us now is Ella Hoxha, a Pictet Asset Management Senior Investment Manager on the Global Bonds team. Ella, thank you so much for joining us today. What exactly is priced into bonds right now? It seems that all the taper talk that the markets were talking about could already be priced in.
Good morning. Yes, I think the market had excessively underpriced inflation risks starting the year, and then all the way until May, it actually went above and beyond pricing those particular risks as affirmed by the price action over the last couple of inflation prints effectively in the US. So with regards to this particular meeting, the market seems to be a lot more relaxed. It seems to be going along the line of the Fed rhetoric of late and thinking, at least for now, that we will probably be seeing a transitory type of inflation. So that's what's caused quite a bit of stability in rates, particularly in the US.
So Ella, where do you see the best buy in bonds right now? If you look at globally, where do you want to be invested in?
Right. So we've favored the US in this particular repricing because that's where we've had quite a bit of excessive repricing take place. Australia seems to offer some value as well. But one of the key markets for us year to date particularly has been China. So Chinese local bonds have offered good value because they've also had very good diversifying properties relative to the rest of the rate space. So it's given a global bonds manager a bit of an escape, if you like, from the general repricing in core bond markets. China, we believe, also offers value in terms of tail risks, both on the sort of the more inflationary tail, but also on the more sort of a bit of a slowdown, given that we are likely to be facing more of a fiscal, I wouldn't call it a fiscal cliff, but a reduction in fiscal spending relative to the amounts of fiscal spending we saw last year. So that sort of tail risk for growth is also protected out of China, we believe, even better.
I mean, some of the other unknowns, I guess, whether, commodity prices turn into a super cycle or something like that. Then I know you also mentioned U.S. taxes. Is there anything else on the radar that could actually, change the trajectory of some of these bonds?
Well, for us, clearly the key focus is inflation. So we mentioned at the very start of the session that the markets seem to have calmed down about that. But historically speaking, we have a really difficult time with inflation gauges, and that's been the case for central banks as well. So the predictability of inflation is a very difficult game to conduct. And so we like to think around the scenarios of, what can actually go wrong and try to protect the portfolios along those lines. So buy insurance, if you like. And for us right now, it's not our core case for certain, but we like to protect the tail risk of a potential inflation overshoot. We deem that scenario to be probably on the 15% probability range, but it is one that is absolutely worth protecting for global investors. And, on that round, things like the dollar, things like curve flattener positions, and also Chinese local bonds that I mentioned earlier are good hedges. So for us, that probably remains the most crucial component for rates more broadly into the rest of this year.
Ella, thank you so much. Ella Hoxha there, Pictet Asset Management Senior Investment Manager on the Global Bonds team. Now, coming up, after 12 straight years in power, Israel's parliament voted out Benjamin Netanyahu from his post of prime minister. We discuss the new coalition next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, it's the end of an era in Israel. Nationalist politician Naftali Bennett has been sworn in as Prime Minister overnight in Jerusalem.
I, Naftali
Bennett, son of the late Jim Yaakov and Myrna Leah, accept the obligations of Prime Minister to uphold the values of the State of Israel and its laws, to fulfill my duties and enact the decisions of the Knesset.
Well, that's after the Israeli parliament approved a new government, effectively ousting Benjamin Netanyahu as leader after a record 12 consecutive years. Now, there is quite a lot of geopolitics, of course, dominated over the weekend at the G7 over in Cornwall. Now, you're seeing live pictures from Brussels, where the Canadian Prime Minister Justin Trudeau is speaking at a NATO panel ahead of the leaders' meeting. This will be the first summit with Joe Biden as president. Of course, you can watch all of that on Live Go, L-I-V-E Go, on your Bloomberg terminal. A lot of the focus, of course, is on how some of the leaders will deal with Russia after a pretty strong rebuke or strong words against China over at the G7. It does seem that they have a united front. Again, we'll see whether that's true and whether it holds, but something that we need to keep a very close eye on. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. The focus, of course, is on what markets are also doing. So a lot of geopolitics, and we expect Prime Minister Boris Johnson to possibly delay the reopening. It was scheduled for June the 21st. We understand through insiders that actually these COVID rules could be delayed, or the COVID reopening could be delayed by as much as 4 weeks. Then, U.S. equity futures and stocks posting modest gains this Monday. Again, investors preparing for a key Federal Reserve meeting later in the week. I guess with so much anxiety out there on the markets about the Fed's plans to scale back monthly stimulus injections ebbing, we're seeing bulls coming back to actually try and put their dominance in place. So it's going to be a very exciting Federal Reserve meeting. We'll have, of course, a full roundup of the news on the markets. We'll look at bonds, currencies, and equities. Investors anticipating that the central bank will pretty much reaffirm the pace of bond purchases this week, even if it delivers projections for interest rate liftoff in 2023. And it's really these projections about liftoff in terms of interest rates that the markets will be watching out for. So we'll have plenty more. That's coming up shortly. This is Bloomberg.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents, which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Actually, what happened at this summit was that there was a colossal amount of work on subjects that had absolutely nothing to do with Brexit.
This is not a contest about who can do better in front of a press conference or try to embarrass each other. It's about making myself very clear.
And that's where all of us as a G7 and partners are aligned in ensuring that we are consistent and united in our approach on these issues.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong, and our top stories today. The G7 summit wraps with COVID, China, and climate in focus, but despite a show of unity, hints of tensions and contradictions remain amongst leaders. Biden's European tour continues. The U.S. president meets with NATO, the EU, and President Putin this week. And Prime Minister Boris Johnson looks set to delay the UK's reopening amid a surge in cases of the Delta variant in England. Now, all of that, of course, will also be overshadowed by the huge importance of the Federal Reserve. It meets later this week, Kaylee, and the focus is on when they'll maybe hint at when they could start tapering or moving interest rates, and that's definitely what the markets are watching.
Yeah, will they talk about talking about tapering, or will they just straight up talk about tapering? That's what we're waiting to see on Wednesday, and ahead of that, the market is really just holding its breath. I would note in the Asian session, volume was a bit light because we did have holidays in Australia, China, and Hong Kong. So keep in mind, if you check out Map Markets Go on the terminal, the moves you're seeing for those countries are from last week. Stocks that were open, though, include in Japan, where the Nikkei was higher by about 0.75%. And I wanted to point out Indian equities as well. The Sensex at one point was lower by about 0.5%. It has inched higher into positive territory by about 0.1%. And that is after we got inflation data out of India. Wholesale prices at the highest in 3 decades. So some of those pressures really are building. And after that data, the Indian rupee is weaker against the U.S. dollar by about 0.25%. The Japanese yen, meanwhile, is stronger. We're sitting right around 109.65. As for what the picture looks like here in the U.S., as we await the Fed on Wednesday, we are sitting at all-time highs. We closed at a record on the S&P 500 on Friday. We're just inching higher from that level this morning. Futures up about 4 points on S&P E-minis. We're steady in the Treasury market around 1.45% after that huge decline we saw in yield last week. It is a bond market that clearly is positioned for a continually dovish Fed. I would also note that oil is moving higher. We're up 1% on WTI, above $71 a barrel. And then in crypto, Bitcoin is coming down a bit, but it rallied 9% yesterday to right around that $39,000 level. You can thank Elon Musk making yet another pivot, saying that if mining becomes more focused on clean energy, Matt, then Tesla will allow transactions using the cryptocurrency once again.
Yeah, well, once again, Elon Musk, kind of the tail wagging the dog here, but I'll leave crypto aside for now. Take a look at European markets. We are higher pretty much across the board. You can see the Republic of Ireland is down, but everyone else is gaining. The Stock 600, the broader index, is up right now, and the pound, I think, is very interesting to watch as we worry about delays to the reopening in the UK. Traders seem to have taken it out on the currency. So the pound sterling losing a little bit of ground against the dollar. Important to note that it's at a relatively high level at above $1.40. But then a couple of big movers here. Phillips, I think a really important mover, a recall on a lot of the sleep apnea masks because of potentially toxic foam in those products. As a result, the stock hit almost 5%. And Ferrari also down after Goldman Sachs does a double downgrade directly from a buy to a sell, saying that CapEx is going to soar as the company makes a switch to electric vehicles. So this is a stock that, you know, Francine, has outperformed everybody for years, and all of a sudden this year the reckoning has come with ESG investors and Ferrari a little bit late to the game.
Yeah, so I know, Matt, you definitely watch the car makers more than anyone I know, certainly in financial news. And the focus is on, how you make these electric cars for these like super fast cars that cost like hundreds of thousands, even $500,000, but still having the engine that does that noise that people love.
They're going to give up the engine noise. That's the decision. If you look at exotic car makers like Rimac, there is no noise except for the whir of the electric motor, which itself is kind of cool but very quiet.
All right, you have to do a test drive for us, Matt, and report back.
Yes,
now
I
look
do.
at what's ahead this week. Today, Boris Johnson will announce whether or not to extend COVID restrictions in England. The NATO summit will also be held in Brussels. Tomorrow, the EU and the US hold a summit, which Joe Biden will attend. Wednesday, we'll get the latest Fed decision, news conference from Jay Powell. That's a big one for the markets. President Biden also meets Vladimir Putin in Geneva. Interesting to see the tone and body language amongst the two leaders. And then on Friday, we get a rate decision from the Bank of Japan. So there's quite a lot going on. And if you look at, of course, what the NATO leaders would focus on, it's probably on Russia after the G7 leaders over here in England at the weekend were pretty harsh on China, and they seem to have a united front. I don't know whether we have live pictures or not of NATO leaders. Just moments ago, Justin Trudeau was speaking in a panel. I think Boris Johnson has just arrived there with his iconic hair, really.
He's in a hair contest with Trudeau, Francine.
School. Yeah, I would argue not the same look. We will have plenty more from Boris Johnson to see whether the alliance holds or not. Now, the NATO summit, of course, follows this weekend's G summit. So let's get straight to Maria Tadeo in Brussels. Maria, if you look at the G7 meeting, they had a united front in how to deal with China. Will we have the same with NATO on how to deal with Russia?
Well, Francine, that is the goal. And in fact, you're very right to point out that there was a joint position to come out of the G7. There was a joint statement, 25 pages. And by itself, that is a highlight. I'm sure you remember during the Trump presidency, there was no joint communique simply because he would not sign on to the conclusions. Now, when it comes to NATO today, it really is about Russia, and it really is about taming some of the Russian interference that we're seeing in Eastern Europe. The Polish, the Ukrainians, the Lithuanians, very concerned about what they deemed has been very aggressive behavior from Russia in the past few months. And of course, this is coming just 2 days before he heads to Geneva to meet Putin. Now, the goal for the Americans here is to put a united front and to get to this meeting with leverage and kind of in a position to be able to say, the Western powers and NATO are fully behind President Biden, and he's going to get tough on Putin.
Yeah, and Maria, we understand that UK Prime Minister Boris Johnson is discussing Russia right now as he arrives at that NATO summit. Other than the Russia issue, what else is going to be the focus for NATO over there in Brussels?
Look, I think it will a lot be about Russia, and Russia will take center stage. I think what is also key is to look at the fact that in every previous NATO summit under Trump, there was this fixation with the 2% spending, you know, that these countries, rich countries, need to pay more to this protection and this joint venture that is NATO. Now, it's interesting that this year the Americans, of course, they say they still want countries to pay into this, and NATO needs this, but it's not as confrontational as it was. I have to tell you, I haven't really heard a lot of chit-chat here about the 2%.
Maria, thanks so much. Maria Tadeo there in Brussels covering NATO for us. Boris Johnson speaking there at NATO, also looking set to announce today, later today, that he won't lift England's pandemic curbs on June the 21st after a rapid surge in the Delta variant. Well, joining us now is Sam Fazeli, who leads pharmaceutical coverage for Bloomberg Intelligence. Sam, as always, thank you. So is the Delta variant not, you know, can it get through vaccines, or is it that the UK population has not been vaccinated enough to warrant protection?
Good morning, Francine. You have both problems, in fact. So there's a whole host of people who have not. So 45% approximately of the UK adult population has not been vaccinated with 2 doses yet. And 1 dose isn't sufficient to really stop the infection. Maybe it reduces the severity of the disease a little bit, but certainly not the infection, and maybe at about 30% at best protection so far based on the data we've seen. So you have a problem with both of those issues that is causing a bit of a headache in the UK.
If they stretch the reopening 4 weeks later, does that give the UK enough time to give people enough second doses, to get enough people vaccinated to take care of this outbreak?
That is an excellent question, Matt. And you know, I think that would mean that would probably be at about a 60, 70, well north of 60% of adults fully vaccinated in about 4 weeks' time. But the question is, if the decision about reopening, etc., is made based on the number of cases, that still leaves a large percentage of people who are going to be testing positive if we continue down that path.
All right, well, we will all await what that decision is. Thank you so much to Sam Fazeli of Bloomberg Intelligence. I do want to take a quick look at some stocks moving in pre-market trading here in the U.S. now. And of course, I have to begin with a meme stock because, yes, those are still some of the biggest news makers in the equity market. AMC, of course, one of the poster children. It rallied 15% on Friday, and those gains continue on this Monday morning. Shares up about 3% in early hours. I was also mentioning Elon Musk's pivot on Tesla and Bitcoin once again, saying they will allow transactions in the cryptocurrency once more clean energy is used for mining. And on the back of that, Bitcoin got a little lift. So too do Bitcoin-tied stocks in pre-market trading. MicroStrategy, one of them, up 4.5%. And Tesla, for its part, I would note, also is higher, not as large of a gain, but still that stock up about 0.8% before the bell, Francine.
Yeah, we have a lot going on, and Tesla never far from, of course, what we're looking at. Coming up next, Christian Keller, Barclays Head of Economics Research. We'll talk to him about the Fed. Maybe he'll have a thing or two to say about Bitcoin and Tesla. And then a little bit later, Joyce Chang, JP Morgan Chair of Global Research. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
This is Bloomberg Surveillance. I'm Matt Miller in Berlin, along with Kaylee Lyons in New York and Francine Lacroix in London. Now, I have a chart here that I'm pretty excited about because it sets up the Fed this week. And really, the same can be said of most Western central banks. The risks around their decisions this week and in the coming weeks are really asymmetric because everybody seems to be on one side of the trade. We welcome our viewers on Bloomberg Radio every day at this hour. What we're looking at here on this chart is the drop in yields that we've seen 4 weeks now in a row, and last week was the biggest drop in yields we've seen in over a year. So people are piling in to treasuries even after the big CPI and other inflation prints that we've seen. And Christian Keller joins us right now from Barclays. He's their head of economics research. And Christian, why is it that everybody believes the Fed is going to hold true? Everybody believes central banks are going to hold this push against inflation.
First of all, I would say that most people are quite puzzled and have been quite puzzled about it. It's easy at the end of a week to rationalize things and why this has happened. And you say people have been piling into treasuries. It's probably also people getting squeezed out who had short positions. But what is fascinating is that in light of data coming in that tells us a lot about more bottlenecks and persistent supply side pressures and a CPI print in the US, it was 5% headline year on year. Surprising on the upside, markets actually took, at least yields in the US in a way went down below 1.5%. So I think what they're telling us is that with the message from the ECB last week and with the expected message from the Fed this week is that central banks, there's enough uncertainty for central banks to tell us, look, we will look through this for now. There are a lot of signs that this is transitory. Used cars will not continue to go up in price. And, markets by now say, look, if it's uncertain, if I won't be able to tell the outcomes of the US labor market in particular for another 6 months or so, it's difficult to bet against central banks at the core who told us that they will remain dovish and they will look through this and they firmly believe that this is transitory.
There was a big note out last week from David Folkerts-Landau and the team at Deutsche Bank. There was another note out from Andy Haldane saying, look, this is a serious spot we're in, the danger zone, you might say. Today, ECB Governor Holtzman came out and said they're not in a dangerous zone for inflation, but we haven't seen this kind of fiscal increase. We haven't seen this kind of monetary help, and especially in concert, right? Since World War II, isn't there going to be persistent inflation that has to come along with that?
Look, I agree with you that the threat probably is bigger than it has been for a while. And, I looked a little bit recently at what happened in the US in the 60s, right? Because there you also started off with very low inflation expectations and typically remember the 70s with the oil price spikes. But actually, things became unanchored in a way during the second part of the 60s already. Now, why are markets not reacting more? I think for two reasons. First, you say on the monetary side, I think that we have seen before. And the new issue is here that it comes with a lot of fiscal support. But what I also read is the markets are no longer sure how much of that $4 trillion spending package that the US administration proposes will really come through. And I think there's now the feeling that maybe it will be a lot less. And if you believe that, then suddenly in 2022, you actually have some, I don't want to call it a fiscal cliff, but you'll have a significant reduction of the fiscal impulse. And if the same happens in Europe and elsewhere, I think markets believe that with growth already peaking probably now, going to be strong this year, but peaking in momentum terms, and then, fiscal dropping off next year, regardless of the rhetoric, they believe, why should inflation then really be persistently higher against a target where the Fed has told us they want to actually overshoot 2% somewhat?
But Christian, how much of the inflation overshoot or certainly tapering is already priced into the markets?
Right now, if you look at the break evens, all the way out to 30 years, they're relatively mildly pricing inflation. 10-year break evens, I think 2.3 or so. So I would say what they are pricing right now is almost exactly what the Fed would want. But what they're not pricing, I believe, is really something that is out of control, where the Fed suddenly does not have just a moderate overshoot, but gets something more. And I think the risk here is also that with the Fed policy and their determination to stay, dovish, is that we're going to see late hikes, but maybe more than the market is pricing now. So we believe markets are not priced for this upside surprise. Okay. We do believe that steepening in curves is probably what markets should positioning for.
So, Christian, will we see a move in the dots this week?
That's in a way next to the language around tapering the key issue. We think a few people, maybe two may move. You may get an exact split in the dots with regard to will they hike in 23 or not. The market, of course, the futures are pricing already a hike in early 23. So compared to the market, the Fed will stay dovish. But I could imagine that there'll be, two dots possibly moving a bit closer with regard to where they see the first hike.
Christian, thank you so much. Christian Keller, their head of economics research at Barclays, joining us this morning. Now, coming up a little bit later on G7 and NATO, we talk to a former British ambassador to the U.S. He's Peter Westmacott. We'll ask him how both allies should deal with Russia and China. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Broadway's returning. June.
Have you bought tickets?
Is busted out.
You've got more time here. Have you
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lapp in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg. First word news on President Biden's quest to enact his $4 trillion economic agenda enters a turbulent new phase today. The House comes back into session and Democrats are ramping up pressure on the Senate to produce a bipartisan compromise. Now, a key challenge is that the fast-track budget process that progressives want to use will only be available if all 50 in the Senate Democratic caucus agree to take that step. Iran is said to, or says it has reached a broad agreement with the U.S. over the lifting of sanctions on its industrial sectors, including energy. But the country is warning there is, quote, very little time left for world powers to revive a 2015 nuclear deal. The trade restrictions have all but prevented the Islamic Republic from exporting oil. Now, oil markets are keeping a close eye on the talks taking place in Vienna. And Benjamin Netanyahu's record run as Israeli prime minister has ended. Opposition parties united in a bid to end more than 2 years of political turmoil. Now, the country's parliament has cleared Jewish nationalist Naftali Bennett and centrist Yair Lapid to take over in a power-sharing arrangement, while Netanyahu is now vulnerable to pending graft charges. Now, passing a budget will top the new coalition's agenda. Finally, Bitcoin has jumped after Elon Musk said Tesla would resume transactions with the cryptocurrency when mining is done with cleaner energy. Musk has whipsawed the price of Bitcoin and other digital tokens in the past few months, ever since announcing Tesla had bought $1.5 billion of Bitcoin in February. I mean, I love the fact that actually he tweets and everything moves. What I don't really understand is that there's not an infinite, way of actually changing the way you mine Bitcoin, right, Matt? So it's unclear whether Bitcoin can become any cleaner.
I agree 100%. Of course, it could become cleaner, but what's the metric? Like, who's out there measuring the way every miner is conducting his or her business? I don't get why that statement is enough to move this asset, but there you go.
It's 2021. Do we have to have a real reason why Elon Musk on Twitter can move Bitcoin to such a degree, Matt? But to your point, there are estimates out there. Some people say that about 39% of mining is powered by renewable sources at this point. Of course, Elon Musk said in that tweet yesterday he wants it to get up to 50%. So I don't know what metrics Elon Musk is looking at, but it's just a question of when exactly we're going to get there and Tesla's going to start accepting Bitcoin for transactions again, Francine.
Yeah, I just love the story. It's just like the story that keeps on giving. And unclear where Bitcoin ends up, but our resident expert Matt Miller is very excited. Coming up, maybe we'll talk Bitcoin as well. Joyce Chang, she'll have a thing or two to say about Bitcoin, as do you, Matt.
I just don't love the story. I love the asset class. I love cryptos, the space, the community, but I don't love the story of Elon Musk moving it up or down with a tweet. It hurts me. Right here, okay, Francine.
We'll see.
For those on
radio,
Matt is pointing to his heart.
This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kaylee Lyons in New York. A lot going on, Matt, in the world of geopolitics. Of course, leaders meet in Brussels today for NATO, US-EU meeting tomorrow. Then, the big one, Vladimir Putin meeting with Joe Biden in Geneva. But actually, moving the markets will be the Fed.
Yeah, the Fed for sure, and we're focused on that. But I think the geopolitics has been so exciting over the past weekend, Francine. It doesn't look like, well, Biden isn't going to be able to stop Nord Stream 2. He didn't get the kind of opposition that he wanted from the G7 on China. And the U.S. was basically the only country to make big vaccine donations. Biden promised $500 million, and then the other 6 of the G7 countries came up with 113 million doses. So he's doing his best for sure.
Yeah, it certainly is. How's it all playing out in the markets, Kaylee?
Well, Francine, I'm going to say something I feel like I've said a lot recently, and that is that I'm looking at record highs on both sides of the Atlantic. Granted, once again, the moves aren't massive. The Stock 600 is at an all-time high, but off the highs of the session and only up about 0.2%. Here in the U.S., S&P 500 futures are higher by about 3 points or so after closing at a record on Friday. And in the Treasury market, we're steady right around that 1.45% level. We're hovering around the lowest levels that we've seen in about 3 months ahead of that Wednesday Fed decision. The question is, do we get a hawkish surprise that maybe moves some things in the bond market? We will all have to wait 2 days to have that answer. And then, of course, we've been talking about crypto all hour, and Elon Musk moving the market once again with a tweet about Tesla accepting Bitcoin for transactions once there's a little bit more clean energy involved in mining. So Bitcoin's hanging out right around that $39,000 level. No surprise, the fact that Bitcoin moved higher by about 9% yesterday before stocks were trading here in the U.S. They're playing a bit of catch-up in pre-market trading. Some stocks tied to cryptocurrencies, including Marathon Digital, which is a Bitcoin miner. It's higher by 7.5%. You have Riot Blockchain moving to the upside as well. Then, of course, we have a little bit of a lift for some of those meme stocks. AMC is higher by 2.25%. And then, Matt, you mentioned this one, so I threw it on the board just for you. The ADRs of Ferrari down about 3% after that double downgrade at Goldman Sachs.
I will tell you something very interesting. Usually they would be ADRs, but Ferrari actually listed on the New York Stock Exchange. I know that because I was there on the floor with Piero Ferrari and Johnny Elkann. It was one of the more exciting days of my life. Now, speaking of exciting, Francine, I have a chart of European bank stocks, and I'll tell our listeners on Bloomberg Radio what I'm showing you. There were so many to choose from because the excitement around EU bank stocks has been building over the past couple of weeks. This shows the gap between the U.S. bank stocks performance in blue. Note, they've done incredibly well, and European bank stocks in white. Now, when you look at it like this, it doesn't look like European bank stocks are much of a success story. But trust me, on their own, they have rallied 76% from the bottom. They're almost back to pre-pandemic levels. People have a lot more faith in them, and they're still at lower valuations than they were in 2019. So there's a lot to talk about around EU bank stocks.
I love that chart, actually. I pushed it out on social media a little bit earlier, Matt. One of my favorite charts, especially seeing the rally that the EU banks had last year. Now, talking about the banks, about valuations, but also in general about the markets. From New York is Joyce Chang, Chair of Global Research at JP Morgan. Joyce, thank you so much for joining us. I know Matt wants to go to the banks in a second, but overall, when you look at what's been discussed at the G7, NATO, our relationship with China and Russia, does that change any of your forecast, or is it just geopolitics that for the moment doesn't impact supply chains, doesn't impact trade?
I think the U.S. is putting out a very strong message that they want an alliance of the democracies against the autocracies. But the rest of the world is basically saying, you know, look, I mean, we need to balance all of our interests, and we're still coming out of this recovery. So I don't actually think that it changes the story that much. And the story is still the U.S. recovery marches on, and that's going to be very strong, you know, through the third quarter of the year. But the rest of the world, Europe is also going to come out of this. So we talked about European bank stocks, but we see in the third quarter of the year, European growth coming back nearly 15% in the third quarter. So the U.S. has started out, but Europe is going to catch up. And I agree that the bank stocks still look attractive here. We also think the energy sector looks attractive here.
So, Joyce, overall, when does the Fed actually start tapering? Are they 6 months to a year ahead of the ECB?
I think that this is probably, you know, early next year where you begin to really see more action about this. The market has now accommodated, you know, the talk, and that's sort of in the marketplace. And I think Treasury yields should move up from here. I mean, we've been surprised by how subdued they are. So I would expect that move to occur, and that you're seeing more of the actual tapering talk, you know, early next year. But I think, you know, you see in the market go through a number of different phases. First, there was the anticipation of the taper talk, then the actual, you know, the actuality of it actually had Treasury yields coming down. But we're surprised by where break-evens are and where Treasuries are at right now. And we do think that this is a point where U.S. Treasury yields are set to rise in the next couple of weeks and months.
It's like that wherever you look, Joyce. This morning, I spent some time on the terminal going around to different regions, and yields have come down everywhere. Just a couple of weeks ago, we were looking at almost negative 10 basis points on bonds, and now we're back down at negative 26. The same is true if you look at gilts. Why is it that the market all of a sudden believes the major central banks are going to look through this inflation?
Well, I think some of this for U.S. Treasury at least has been positioning. I mean, we think there's probably another 30 basis points that you could actually see this move. And you had such front-loaded moves earlier in the year. But from the ECB, you've had the message of, you know, just keeping with the asset purchases. So I think that, you know, there's a sense that, you know, still there's going to be more caution coming from the ECB side. But on 10-year yields, I mean, we're still very comfortable that you're going to see this approaching sort of the 2% mark by the end of the year. So I've been surprised by just, you know, how the response has been, particularly given the inflation prints that we've seen, and that we're likely to see inflation elevated for the next couple of months.
So is the biggest downside risk potentially a hawkish Fed surprise?
You know, I think that the Fed, you know, messaging actually has been pretty consistent here. You know, they have been, you know, talking about tapering, and there's talk, but there's not going to be, you know, much action on that. Now, we've moved up our call on when we expect the Fed to move, you know, to 2023, but that's still, you know, quite a long time away. So I think the market has already priced in quite a lot. What I would expect is that you would see Treasuries move from the current levels that we're at. I think the inflation is still going to remain on everyone's mind as well, but I think you do see a peak coming in the next few months. You know, travel is going to continue to pick up. But I think U.S. equities here are going to continue to perform well, with Europe catching up over the next few months. So still strong outlook for the equity markets.
Joyce, I mean, the equity market in Europe, because it's been undersold a little bit, or actually do you see value in the U.S.?
We're looking to 15 to 17% upside, and for value and cyclical leadership here. We really do prefer the domestics over the exporters to periphery to the core, but we do see energy sector across the board still having value here. We have oil going to, you know, $80 later in the year, and at $70 per barrel, this is the highest levels we've seen since May of 2019. And we still have this recovery online because the travel will pick up from this period, you know, through August, through the summer months.
Joyce, when you look at some of the, things looking for the summer, are we underestimating the impact that some of these variants could have? I know, especially in the U.S., there's a feeling of reopening, that actually everything's fine, we're on a strong trajectory for the recovery, but then you look at the UK, and they're thinking about delaying the full recovery, and it's the full reopening, and it's unclear why that is.
I think the vaccination rates, at least those with one dose, have gone up quite a bit in the U.S. and Europe as well. I think the Europe is being cautious just given the experience we've had, but we are beginning to see that just the correlation between the vaccinations and the mobility in the developed countries. I do see that reopening momentum is still there. The travel sector is going to benefit. Value, cyclical leadership. I mean, we would still keep with those themes through the summer months, and I also do think that energy prices will continue to be strong, just given the demand factors that are in place right now.
I mean, given the demand, given the pent-up savings we hear so much about, Joyce, what happens if inflation stays at, relatively high levels, possibly uncomfortable levels? What do you buy to hedge?
Well, I still think that commodities are probably still the best hedge that you can do here. That's to me the one that's it's traditional. It's not necessarily the boldest answer out there, but I think commodities are the best way to hedge. One thing that we've also seen is that the bond equity correlation has turned positive again, and that could increase the demand for commodities as a diversification benefit as well as a hedge against inflation. So I would stick with commodities here.
Joyce, I'm not sure if Bitcoin is a commodity or if it is a currency, but I'm curious how you're viewing it.
Well, I think for sure the volatility we've seen is a setback to the institutionalization of Bitcoin. There's a lot of talk about whether this could be a substitute for gold, but when we see the volatility that has been in place, I do think that just institutionalization of this asset class is going to take a lot longer. Now, we have a lot of fair value models, as do others, but we've looked at the lowest cost mining, and then we've really looked at what would happen if it could take the place of gold. And you have a very, very wide range here. So I think that institutionalization of Bitcoin is going to come much more into question, just given the magnitude of the volatility and the moves that we've seen over the last few weeks.
So, Joyce, when could realistically, in terms of timeline, I mean, could it ever actually, replace or at least try and have an impact like gold has, or is it just disconnected at the moment?
I think it's disconnected at the moment, Francine, because when you take a look at the volatility, I mean, you've had like 4 to 6 times the volatility of gold. So talking about a replacement is, I think, very difficult to envision for institutional investors. And then you have the ESG concerns on top of that. I mean, looking at the inflows, we've seen about, 14 billion of inflows since last fall, but you've had the market cap go up as much as $800 billion over that same period of amount of inflows. So I think the concerns about asset valuation, some of the ESG concerns as well on where the mining takes place, and the volatility all mean that this is something that will continue to have a great deal of interest, but the speculative aspects of it have become very clear over the last few weeks.
Joyce, thank you so much. Joyce Chang, there, Chair of Global Research at JP Morgan. Now, coming up, Peter Westmacott, former British ambassador to the U.S. We'll talk about the G7. We'll, of course, talk to NATO, about NATO, and we'll talk about the Geneva summit between Biden and Putin. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Crypto is a nuanced issue, and it's possible the U.S. gets crypto wrong.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, all eyes on Cornwall in the southwest of England over the weekend as leaders from the G7 and European Union met for the first time in 2 years. Now, it comes at a crucial geopolitical moment for the Western allies, marking Biden's first meeting and Angela Merkel's last, with divisive issues like Brexit and China dominating the agenda. Well, joining us now is Peter Westmacott, former UK ambassador to the US, France, and Turkey. He's the author also of the recently published book, They Call It Diplomacy, 40 Years of Representing Britain Abroad. And he joins us today. Peter Westmacott, thank you for joining us. Ambassador, when you look at some of the things that we saw at the G7, this was a united front, but differences remain on how tough they were on China, on how to deal with the vaccines, and on Brexit. Is it more of a united front for the cameras than it is behind closed doors?
Well, morning. Thanks for having me on. I think you're right that there was a nice show of unity, and the second day at least the sun shone, and so we had blue seas and blue sky in Cornwall, which is very nice for the tourist industry there. The communique showed that there was quite a high level of agreement on a lot of things, not perhaps as many vaccines being donated to poorer countries as we would have liked, and perhaps not yet flesh on the bones of a united approach to dealing with the rise of China. Perhaps that would have been a bit much to hope for. Behind the scenes also, there was, in fact, not entirely behind the scenes, also front of stage, there was a bit of a scrap between Boris Johnson and his European colleagues on the whole business of Brexit and the way in which implementing Britain's departure from the European Union with the Northern Ireland protocol to the withdrawal agreement has in fact complicated trading arrangements between Great Britain and the island of Ireland, and that was quite a squabble because after all there were 5 different European leaders who were there in Cornwall, and all of them with an EU perspective on that, and a president in the form of Joe Biden. Yep. First outing to the G7, strong Irish-American links, strong Irish roots, and a great believer in the importance of peace and stability in the Good Friday Agreement in Northern Ireland, and actually no fan of Brexit anyway, as he's made clear, and as he seemed to make pretty clear when he was speaking to the media at his bilateral with President Macron of France. So you're right, plenty of things behind they weren't on the same page.
Yeah, I mean, given, and we see beautiful pictures for our wonderful listeners on radio, also of the Queen with Boris Johnson flanked by the G7 leaders. Ambassador, when you look at the most important meeting this week, it's probably Putin-Biden. What kind of tone can we expect from them?
I think the United States President Biden has set out a certain amount of what he expects and doesn't expect from that meeting, and so also has President Putin. He's given an interview as well, as we know. I think the expectations seems to me to be modest. That is to say, the relationship is not in good shape. Both sides admit that. President Biden has said that he wants to get the measure of where President Putin's coming from, not really get the measure of the man. He knows him. They've been around the block, both of these two, for a long time. But I think that President Biden will want to be pretty firm on what he regards as unacceptably bad behavior from Russia, whether it's cyber warfare, whether it's interference in democracy, whether it's supporting state-sponsored hijacking of civilian airliners, or whether it's about murdering political opponents or journalists who ask too many questions. There's all that out there, and that will be important. And I think that the president will want to find a way of dealing with Russia, but he will not pull his punches on those difficult issues.
Ambassador, with that laundry list of behaviors from President Putin, is there still so much support other than Germany for this Nord Stream 2 pipeline? I mean, this country, the largest economy in Europe, essentially wants to help fund or will be helping to fund those activities, even if they don't want to.
Outside Germany, I honestly don't know, Matt, whether this is something that people feel very strongly about. What I have sensed is that from the Washington perspective, although Secretary Blinken and the President and others have made pretty clear that they don't think this is a good idea, I sense that they're backing off a bit in that the project is almost complete, that Germany doesn't seem willing to back down, that this is not something the United States would like to do because it essentially supports the Russian economy, but that maybe there are other ways in which like-minded countries can work together on addressing the problems of Russia.
Thank you so much, Ambassador Peter Westmacott, their former UK ambassador to the US, France, and Turkey. Now, coming up, back to work. Goldman Sachs employees set to return to the office, and we're live at the bank's headquarters in New York. That's coming up next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Wall Street is returning to the office, and U.S. Goldman Sachs employees are set to return to the bank's Lower Manhattan Tower today, while the target date for the U.K. staff is June 21st. Sonali Basak, Bloomberg Wall Street reporter, joins us now with more from West Street on a very rainy Manhattan morning. Sonali, what's the scene like on the ground?
Yeah, people are just starting to trickle in, but I've been told that Goldman Sachs expects a long line as employees, and this is my public service announcement, have not yet downloaded the app, that they need to attest that they've had their vaccinations or have not traveled to a place with a lot of COVID or have been exposed to people with COVID. Kaylee, it's an emotional day. This is not just in New York. This is across the United States that Goldman Sachs is planning to bring back thousands of employees. And honestly, it's a big day that a lot of employers will be watching. As we know, they're a very early employer to be doing such a thing, and in New York, they're really one of the first.
I'm sure that a lot of employees, Shonali, are happy to come back if they've been working from home for a long time. It's a great change of pace, but will they want to come to the office 5 days a week? Is that what's expected of them?
It's really interesting. They're asked to come back. Goldman Sachs has said that, they're really an in-office. And by the way, many of the banks say, they're not in the business of FaceTime. They work better together. With that said, there are exceptions, including for today. It's not everyone that's coming back. It's on a team-by-team basis. Some teams, I've been told, have been asked to bring some people back, but not everybody, depending on the space they have in that team. We know that this building has been at about 30% occupancy until this point. We'll know at the end of today what the occupancy will end up looking like ultimately. And we know that employees who are asking for flexibility for childcare reasons or other reasons, they are being given that flexibility.
Shonali, thanks so much. Shonali Bazek there in front of GS headquarters in Manhattan, and she'll be there for us throughout the day. Now look at what else we're watching today. And Kaylee, you're watching crypto.
And Elon Musk's Twitter feed, Francine, because the two things are not mutually exclusive. Of course, Elon Musk moved Bitcoin last night with a tweet that he's going to allow transactions with Bitcoin for Tesla when mining becomes a little bit more clean energy focused. So we're hanging right around that $39,000 level on Bitcoin. So I'll be watching that throughout the day, Matt.
I am watching NATO, and I'd say it's so fascinating sitting here in Berlin, the former heart of the Cold War, to watch this group now a lot more loosely aligned than it once was. Here you see Chancellor Angela Merkel coming into the NATO summit. Some hailed her formerly as the head of the free world. She really ruled the G20 summit in Hamburg. That may change now that President Biden is back, so it's going to be interesting to get the tone of this confab.
Matt, what I'm watching is, of course, Boris Johnson, the Prime Minister of the UK, set to delay the full reopening of the UK. It was meant to be for June 21st. This could be delayed by up to 4 weeks. This is because of the resurgence of the Delta variant, which has really forced the team of Boris Johnson to rethink their blueprint for ending the social distancing rules. Again, it just goes to concerns that this rapid rise in COVID cases could put hospitals under strain. And so the question is the vaccination program with the 12-week delay not the right strategy for the UK? So we'll talk about that throughout the day. Also coming up, more on the Fed. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure